Hello, so in this video we will be discussing about SSS. So I'm going to show you the website and then we're going to discuss or get an overview of the law, the contents, and the clauses written therein. And then we have the SSS benefits which can be availed by the members, and then of course the computation of the retirement benefits. And then currently supposedly they have a scheduled increase in contribution rates, but that was deferred. But we're still going to go through the issue once, the new table, which will be implemented once the deferment has expired. Alright. Okay, so this is the website of Social Security System, sss.gov.ph. Okay, so there are a few sections which you can find here. So merong registration for the SSS members, and then they can access their accounts. They can view the contributions that have been credited to their account. Okay, so this SSS is for individuals employed in private companies and also for self-employed individuals, or what we call the voluntary members. Okay, so for someone who would like to prepare for his or her retirement, so they can apply for a membership with SSS and then pay the monthly contributions, and depending on the terms for the availment of the benefits, so they can avail of those benefits. Okay, so in their website they have a section for member registration, employer registration, and then currently they have this small business wage subsidy program. They have their branch directory. Okay, and then they also have an app which they have launched recently. And then if you're someone new, if you're a recent graduate currently looking for work, and you have started your own business or your own job or whatever, and you want to apply for SSS, you can also apply for your SS number online. Okay, so you can visit their website and do that. Alright, so this is just to show you their website and what you can do in this what do you call this, in their website. Okay, so next we're going to discuss the law. Alright, so this is a handbook which can be downloaded from the internet. This is also available from their website. Okay, so let's go back to this. Social Security Act of 2018, Republic Act number 11199. So basically this is an amendment, if I'm not mistaken. So there was an old Social Security Act, and then there's an amendment last 2018, the Universal Healthcare Act. Okay, so the long title of this act: an act rationalizing and expanding the powers and duties of the Social Security Commission to ensure the long-term viability of the Social Security system, repealing for the purpose Republic Act number 1161 as amended by Republic Act number 8282, otherwise known as the Social Security Act of 1997. Okay, so how do you call this? So what we're going to do here is go over the content of the law and just see the benefits or in any information that would be helpful to us as members, as part of the general public, which can avail of their services. All right. So short title: Social Security Act of 2018, Declaration of Policy. Normally they do have this, to justify the making of the law. So it is the policy of the state to establish, develop, promote, and perfect a sound and viable tax-exempt social security system suitable to the needs of the people throughout the Philippines. We shall promote social justice through savings and ensure meaningful social security protection to members and their beneficiaries against the hazards of disability, sickness, maternity, old age, death, and other contingencies resulting in loss of income or financial burden. Okay, so the main point is that for the workforce, okay, for the working individuals, so Social Security is a sort of protection. It's an insurance, okay, that as a working individual, you contribute to the fund, and in case you needed what they call this, the benefits and the types of benefits that they provide are disability. So in case in the, you're working and then something untoward happens to you, let's say an accident, and then you are disabled, which would hinder you from doing your work or continuing with your job. So you can avail of the disability benefits, all right? So it's in some sort of financial benefit in case something not good happens to you. And then of course, sickness, let's say you get sick, either short-term or long-term, then you can also get benefits from the SSS, because when you're sick or you have an illness, you won't be able to continue with your work, and with a no work no pay policy of certain companies, especially private companies. So when you're sick, you'll not be able to earn an income, but you can turn to social security system to provide you with the financial assistance while you're sick. Okay, they would cover your supposed earnings for those days that you are unable to work due to sickness. Okay, and then you have your maternity leave. So for women, for those members who got pregnant while at work or during the duration of their work, so they have to take a leave, of course, to give birth and to take care of the child when it is born. So they have this maternity benefit. So again, with the no work no pay of most companies, so they could turn to SSS to get benefits, what they should have earned during those days or months that they are on maternity leave. Okay, so they could get that from the SSS. And then of course we have the old age. Basically, this is the retirement. After you retire at the age of 60, then you can receive your retirement benefits and then your monthly pension from the SSS, which essentially is the main point of being an SSS member. All right, and then you have that, in case you die during the while you are at work, or after you retire, while you are a retired member of SSS, then there's going to be benefits as well to be given to your beneficiaries. Okay, and then we have other contingencies resulting in loss of income. Currently, we have unemployment insurance, but it's only for people who have who have lost their jobs. Currently due to the pandemic, there are businesses that have closed down, so their employees are who have not found a new job yet, or who aren't working yet, because it's really hard to find a new job in this current situation. So in this case, they can avail of the unemployment insurance from the SSS as well. All right, so in a way, that's the main point of why SSS is existing. So, in the pursuit of this policy, a social security program shall be developed, emphasizing the value of work, save, invest, and prosper. With the current issuance, essentially they provided a new contribution table. Okay, so previously it's only contribution table, but in their new issuance, later we will see, they also created a separate portion for those who are earning more than 20,000. So some sort of additional investment, which would also help, which would also increase the benefits that they would receive the moment they retire, and something like that. Okay, later we will see. The maximum profitability of investable funds and resources of the program shall be ensured through a culture of excellence in management grounded upon sound and efficient policies employing internationally recognized best practices. I'm not sure if you can hear that, but yeah. I kind of live near a factory and they're sort of building something, so sorry about that. It's kind of funny how they start hammering when I start speaking, but then they also stop when I pause. So yeah, it's kind of frustrating. Hopefully I would find some time when they're not doing their work. Anyway, let's continue. So Section 3, Social Security System. To carry out the purposes of this Act, the Social Security System, hereinafter referred to as SSS, a corporate body with principal place of business in Metro Manila, is hereby created. In the discharge of its mandated responsibilities under this Act, the SSS shall function and operate as an independent and accountable government-owned and controlled corporation. So they're a GOCC, they're a government agency within the corporate governance standards and principles of Republic Act number 10149, the GCG law, except as otherwise provided herein. Alright. So we have the SSS Commission. So they have their chairperson, the president, CEO, and then we have your vice president, and then the members. Okay, so we have these, the qualifications for them. Fiduciary duties of a member of the commission include the following. So we have all this: undivided loyalty to the SSS, due care, extraordinary diligence and skill in the conduct of business, and exercise utmost good faith in all transactions relating to his or her duties to the SSS and its properties, and in his or her dealings with and for the SSS, he or she is held to the same strict rule of honesty and fair dealing between himself or herself and his or her principal as other agent. Act for the benefit of the SSS and not for his or her own benefit. I want to highlight this, I'm not sure if you already seen the other video, but of course, you might have heard the SSS was faced with a controversy before because the members of the board, rewarded themselves or awarded benefits or bonuses for themselves. So in a way, for the benefit of the SSS and not for his or her own benefit, might want to slap them with this clause in the law. Anyway, not to profit as individual by virtue of his or her position, and to ensure that profits received by him or her from the SSS properties or businesses revert to the SSS, and to hold the same as trustee for the benefit of the SSS and its members. Because if we really need someone to be in the management of SSS who would not act for his own benefit, his or her own benefit. Alright. Avoid conflicts of interest and not to acquire an interest adverse to or in conflict with that of the SSS while acting for the SSS or when dealing individually with third persons, and declare any interest he or she may have in any particular matter before the Commission. Okay. Apply sound business principles to ensure the financial soundness of the SSS. Compensation for dimes, allowances, and incentives of the appointed members of the Commission shall be in accordance with and subject to the GCG law. Okay, might also want to check into that because they were saying that they are within the terms of the law. Okay, that's why they did what they did. But still, those are the members' money, so it's not really acceptable in the eyes of the public. Okay, given that you are using the money supposedly for the benefits of the members for your own self, so it's really questionable. Okay, so there are other other terms here. We're not going to read everything. Okay, so we have here the valid causes for the removal of any of them. And then we have the powers and duties of the Commission and the SSS. So we have formulate, adopt, amend, and or rescind such rules and regulations as may be necessary to carry out the provisions and purposes of this Act. Establish a provident fund for the members, which will consist of the contributions of employers and employees. So it's also called the provident fund. Alright. Self-employed, OFW, and voluntary members based on SSS contribution rate in excess of 12%. Or monthly salary credit in excess of 20,000 pesos. Oh, okay, sorry. Wait. Okay, so it's called the Provident Fund. Okay, the contributions and then anything in excess will also be included in that Provident Fund. Okay, this one, the monthly salary credit in excess of 20,000 pesos. This is supposed to start this year, 2021, with their together with the new hike in the contributions, they are also introducing the provident fund for those who are earning more than 20,000 pesos a month. Okay. Provided that a member may contribute voluntarily in excess of the prescribed SSS contribution rate and/or maximum monthly salary credit, subject to such rules and regulations as the Commission may promulgate. To maintain a provident fund which consists of contributions made by both the SSS and its officials and employees and their earnings for the payment of benefits to such officials and employees. Conduct continuing actuarial and statistical studies and evaluations to determine the financial condition of the SSS and taking into consideration such studies and evaluations and the limitations therein provided to readjust the benefits, contributions, premium rates, interest rates, or the allocation or reallocation of the funds to the contingencies covered. So SSS is essentially an insurance company, organization. So they have to take into account this factor. So every year they have to, actuarial or reevaluate, reassess the valuation of all the assets and liabilities that the organization has so that they would know how long the fund is going to last. Okay? We hear that a lot in the SSS projects that they're going to be able to continue for only this much number of years instead of perpetuity. And so sometimes they provide that information to the public. They claim such, and so that's somehow that is one of the reasons on how they justify the increases in the hikes, or what do you call this, declining to offer more benefits because the fund would not be able to sustain such additional benefits. So there's that. Okay, we will tackle this more maybe later when we discuss about insurance companies. Okay, but essentially I've already provided an overview of it during the discussion of the GSIS. Hopefully you've seen that. Alright, to approve restructuring proposal for the payment of due but unremitted contributions and unpaid loan amortizations under such terms and conditions as it may prescribe. So sometimes there are employers who are unable to remit the contributions of their employees, probably due to financial constraints. So they are the SSS is allowing restructuring, okay, for the payment of those contributions. Okay, and then also sometimes we have voluntary members, although essentially they are voluntary members, but there are issues, when someone stops their contribution, due to financial reasons most of the time, and then later on they would continue. So with regards to the availment of benefits, sometimes those pose some issues. All right. So authorized cooperatives registered with the Cooperative Development Authority or associations registered with the appropriate government agency to act as collecting agents. Okay, so you can pay SSS through many means, not only over the counter through their offices. You can also pay SSS contributions through banks, through cooperatives, through online banking, mobile banking. Okay. So we have this: to compromise or release in whole or in part any interest, penalty, or any civil liability to SSS in connection with the investments authorized under Section 26 hereof under such terms and conditions as it may prescribe. Okay, so we have this. Sometimes they do announce condonation, for those members who are unable to repay their loans. So they would sometimes offer condonation. So the penalties would either be removed, or the penalties would be decreased to an amount that affordable or could be prepaid by the members already. Okay. What else do we have? So they have this plan. This is in 2018, right? And then back then, they already thought of how the increases will be made. So they have this Europe implementation 2019, 8%, 4%. Employee will shoulder 4% of the contribution, and then the employer will, shoulder 8%. Okay, so the total contribution to that effect is 12%. Monthly salary credit is minimum 2,000, maximum is. 20,000. Okay, so that's in 2019, and that's also the same last year, 2020. Okay, currently there's supposed to be a 1% increase to be shouldered equally by the employee and the employer. So yung sa employee would become 4.5%, and then the employer would be 8.5%. And there's also a corresponding increase in the monthly salary credit. Minimum is 3,000, maximum is 25,000. So this would be in effect for 2021 and 2022. Okay. And then by 2023, they're planning another 1% increase. So it's essentially 1% for every 2 years until it becomes 15%, which is the allowed maximum percentage of contribution for SSS. Okay, in accordance with this law. Okay, so in 2023, 14%, and then 9.5% from the employer, 4.5% from the employee. Monthly salary credit would become 4,000 minimum, and then 30,000 maximum. And then in 2025, this is the highest contribution rate, 15%, 10% from the employer, 5% from the employee. Salary credit will also be adjusted. Minimum would be 5,000, and then the maximum would be 35,000. Okay, the increase in the monthly salary credit would be important because the benefits would be computed based on the monthly salary credit. So increasing this would mean that the benefit that will be received by the members would also be increased. Okay, so in a way that's reasonable. That's an accepted justification for the increase in the benefits. All right, so long as they no longer do certain things that would raise questions, like the bonuses that they awarded themselves. Anyway, still okay. They also allowed, or what they also included kasambahays or domestic workers to become members of the SSS under Republic Act number 3361. Okay, so in a way, the employers of the kasambahays are also what they call this required or mandated to ensure that their kasambahays are registered members of the SSS and that they are paying for the contribution. Okay, and then they do have SSS impose penalties and interest for unpaid loans or unpaid contributions. Okay, so that's another thing to take note. That's why majority of the members, especially the employed in private companies, they do remit the contributions on time. Okay, so in a way, with regard to cash flow, the SSS would be assured that there would always be money coming in every month. Okay, to develop and administer a special social security program for workers. Okay, program may have different contributions and benefits that are proportionately calculated, which must be fair, equitable, actuarially sound, and viable. Okay, so with regards to the computation of benefits, again, it's mostly based on the monthly salary credit of the individual. Okay, so if the monthly salary credit of an individual is 5,000, so the benefit would be based on that. Okay, the computation would involve the monthly salary credit. So comparing someone whose monthly salary credit is 5,000 to someone who's earning 35,000, so essentially, of course, there would be a difference in the amount of benefit because the contribution is also dependent on the monthly salary credit. Okay, so someone earning 5,000 contributing a certain percentage, so the absolute amount is lower compared to someone earning 35,000. Okay, so in a way, it's equitable, it's fair, as they say. Okay. The social security system shall have the following powers and duties. Okay, so they do provide their financial statements, public report. They submit it to the President of the Philippines, the Congress, and then of course it's available on their website. Okay, so this is the first part about SSS. This is mainly about SSS, the law, the benefits, and then later on we have a second video about SSS, which would tackle their financial statements. Okay. To require the chief actuary to submit evaluation report on the SSS benefit program every 3 years or more frequently as may be necessary. I think with the current situation, it's necessary for the chief actuary to provide it every year. Okay, considering that there's the effect of the pandemic this last year, 2020, and it's still continuing this 2021, early 2021. Okay. To undertake the necessary actuarial studies and calculations concerning increases in benefits, taking into account inflation and the financial stability of the SSS, the individual income gap, and poverty threshold for the elderly, similar benefits provided by other social protection programs of the government to provide for feasible increases in benefits every 4 years. Okay. So they pegged it at every 4 years, including the addition of new ones under such rules and regulations as the Commission may adopt. So currently, the new one is the unemployment benefit, provided that the actuarial soundness of the reserve fund shall be guaranteed. Okay, so it should last for a long time. Technically, it should continue in perpetuity, as they say. Because as long as there are members, as long as there are working members who are contributing to the fund, so that should be able to allow the SSS to continue, because essentially there are money coming in, okay? So it's only a matter of management, to be honest, okay? To establish offices of the SSS to cover as many provinces, cities, and congressional districts, including foreign countries whenever and wherever it may be expedient, necessary, and feasible, and to inspect or cause to be inspected periodically such offices, okay? So enter into agreements or contracts for such service and aid as may be needed for the proper, efficient, and stable administration of the SSS. Okay, and then to adopt and approve the annual and supplemental budget of receipts and expenditures, including salaries and allowances of the SSS personnel, against all funds available to the SSS under this Act, and to authorize such capital and operating expenditures and disbursement of the SSS as may be necessary and proper for the effective management and operation of the SSS. Okay, fair enough. To set up accounting system, provide necessary personnel, require reports, compilation and analysis of statistical and economic data, and to make investigations as may be needed for the proper administration and development of the SSS. Personally, I would like it if they could also make this information available to the public, so that we could also see what they are basing their reports on. To acquire, develop, and dispose of property, real or personal, on its own or through a joint venture arrangement with the public and/or private sector, which may be necessary or expedient for the attainment of the purposes of this Act. Okay. To enter into agreement with the SSS or any other entity, enterprise, corporation, or partnership for the benefit of members, transferring from one system to another, of course. From government, you suddenly resign and then you go into a private company. So there's a transfer of membership. To sue and be sued in court, to perform such other corporate acts as it may deem appropriate for the proper enforcement of this Act. Okay, and then we have settlement of disputes. I'm not going to discuss this. You can read it on your own, please. Auditor and counsel. So we have the Commission on Audit, official auditor of the SSS, oaths, witnesses, and production of records. So we have these terms defined, social security system, commission, employee dependents. Okay. Let's discuss this one. Legal spouse entitled by law to receive support from the member, legitimated or legally adopted, and illegitimate child who is unmarried, not gainfully employed, and has not reached 21 years of age, or if over 21, he is congenitally or while still a minor has been permanently incapacitated and incapable of self-support physically or mentally. So those are the dependents. And then the parent who is receiving regular support from the member, also included. Then you have your compensation, all actual remuneration for employment, including the mandated cost of living allowance, as well as the cash value of any remuneration paid in any medium other than cash, except that part of the remuneration received during the month in excess of the maximum salary credit as provided. Monthly salary credit, so nakabase siya dun sa current table na implemented for a particular year. Monthly, the period from one end of the last payroll period of the preceding month to the end of the last payroll period of the current month. Okay. Contribution, employment, services where there's no employer-employee relationship. Services performed in the employ of the Philippine government. Okay. Beneficiaries, contingency, average monthly salary credit. For retirement, the basis is the average monthly salary credit. So from the time that you started becoming a member up to the current time, or up to the time you retire. So it's not going to be your latest monthly salary credit. It's going to be the average of all your contributions, basis of your contributions. Okay. But essentially, they're going to use the last 60 monthly salary credits immediately preceding the semester of contingency. Okay, so 5 years. Okay, but if you haven't yet, I think it's going to be from the beginning up to the current time. When they provide the loan, you can also borrow money from SSS. They provide salary loans. Okay, so the basis for the salary loan would be the average monthly salary credit. Okay, so that the computation of the average monthly salary credit would be from the beginning of your employment up to the current time. Okay, but I think for this one, maybe for retirement, if it's more than 60, the basis would be the last 60 monthly salary credits. Okay, average daily salary credit, semester, quarter, credited years of service being used for computation of retirement. Members, self-employed, net earnings, fixed charges, and then you have coverage. So you have your kasambahay, self-employed who would like to volunteer for membership. You have the private employees, and then we also have, OFWs who would like to be a member, kasambahays, and sa mga members of the SSS. Compulsory coverage of the self-employed. Oh, okay, sorry. It's compulsory now. Okay, so they are encouraged or mandated, okay, to register as self-employed professionals. Okay. Compulsory coverage of OFWs. Okay. It's not compulsory. I see. So sorry about that. I thought it's still voluntary. I'm not sure. Do they have clauses here on what they're going to do if someone did not register? Because they say it's compulsory, right? Anyway. Effective date of coverage. Compulsory coverage of the employer shall take effect on the first day of his operation and that of the employee on the day of his employment. Okay. That the compulsory coverage of the self-employed person shall take effect upon his registration with the SSS. Okay. Okay. So it's only when he registers with the SSS. So you are, what do you call this? Compulsory or mandated to contribute to the fund. Effect of separation. The obligation to pay contributions arising from that employment shall cease at the end of the month of separation, but the said employee shall be credited with all the contributions paid on his behalf and entitled to benefits according to the provisions of this act. He may, however, continue to pay the total contributions to maintain his right to full benefit. Okay. Effect of interruption of business or professional income. If the member realizes no income in any given month, he shall not be required to pay contributions for that month. Like last year, we weren't able to work for 2 months, so there are no contributions, no remittances as well. He may be allowed to continue paying contributions under the same rules if he wants to. No retroactive payment of contributions shall be allowed other than as prescribed under section 22 hereof. Okay. Monthly pension, so this is the computation. Although we have here a computation, but let's just go over this as well. So 300 pesos, that's the base. plus 20% of the average monthly salary credit. So again, the monthly salary credit, if you've been contributing for more than 5 years, so they're going to get the average of the monthly salary credit in the last 5 years or 60 months of contribution. They're going to get the 20% of that plus 2% of the average monthly salary credit for each credited year of service in excess of 10 years. So if you've been contributing for more than 10 years, you have an additional 2% for every year in excess of 10 years. Okay, so kung 15 years, 15 minus 10, so you have 5 years times 2%, so that's going to be 10% plus 20% dito sa number 2, so you have 30%, okay, plus the 300 na base. Okay, how much is that? We're not sure. So that would depend on your average monthly salary credit. So the higher your contribution is, so it means that your average monthly salary credit is also higher. So when you retire or when you apply for benefits, you would also get a higher benefit. Okay, 40% of the average monthly salary credit or 1,000 pesos, provided that the monthly pension shall in no case be paid for an aggregate amount of less than 60 months. Okay, so for you to get this monthly pension, your contribution should be at least 120 contributions. 60 months. 60 months. Okay, but there was another one which they say is 120. Okay, maybe that's the old one. This is a new 2018, implemented 2019. So maybe they changed it to 60 instead of 120. All right. So yeah, whichever. Did they have another one? Okay, shall be the highest of the following amounts. The minimum is 1,000. Okay, 1,000 or 40% of the average monthly salary credit, or 300 plus 20% plus 2% for every year in excess of 10 years. Okay. Notwithstanding the preceding paragraph, the minimum pension shall be 1,200 pesos. Okay, so why do you have 1,000 here? For members with at least 10 accredited years of service. Okay, so if your contribution is 120 or 10 years, your minimum is 1,200 per month. And then if you have 2,400 pesos for those with 20 credited years, the minimum is 2,400. Okay. Additional benefit allowance. Memorandum from the Executive Secretary dated February 2017 by the Authority of the President of the Philippines. Additional monthly benefit 1,000 to be given to all retired, death, and disability pensioners receiving monthly pensions in or after January 2017. Okay, and then what else? Dependents pension. So you have the computation here. 10% of the monthly pension or 250 pesos, whichever is higher. Okay. For death, permanent total disability, or retirement. So the dependents pension would be this amount. Retirement benefits, conditions, or who can avail of this. A member who has paid at least 120 monthly contributions prior to the semester of retirement. Okay. It gets confusing. So you have 120 here, but then you have 60 here, somewhere here. Where is it? Okay. That the monthly pension shall in no case be paid for an aggregate amount of less than 60 months. Okay, anyway. So I guess this 1,000 pesos here is for those people, not less than 60 months. Okay. So still, for you to avail of the retirement benefit, you should at least pay 120 monthly contributions. Okay. Has reached the age of 60, already separated from employment, or has ceased to be self-employed. Has reached the age of, second condition, if you'd rather, reach the age of 65, shall be entitled for as long as he lives to the monthly pension, provided he shall have the option to receive his first 18 monthly pension in lump sum, discounted at a preferential rate of interest to be determined by the SSS. Okay. A covered member who is 60 years old at retirement and who does not qualify for pension benefits under paragraph above shall be entitled to a lump sum benefit equal to the total contributions paid by him and on his behalf. Okay. He is separated from employment and is not continuing payment and contributions to the SSS on his own. Alright. Monthly pension shall be suspended upon the re-employment or resumption of self-employment of a retired member. So we've mentioned this before. So if you already retired, so you filed for retirement benefits with SSS and then you started receiving the monthly pension. If you decide to apply for a job again, you started working because you feel that the pension is not enough and you want to earn more. So you decided to get employed again. In that case, the SSS would cease or would stop or would suspend the pension that you are receiving, because essentially for them you are not retired. Okay, because you decided to continue your work. Okay, so if you stop working again, so they would reinstate your pension benefits. All right. And then, upon the death of the retired member, so if meron pa siyang beneficiaries, okay, we've read yung dependents earlier, so they would be entitled to receive the monthly pension instead. If there are no beneficiaries, his secondary beneficiaries shall be entitled to a lump sum benefit. So it's not going to be a monthly pension anymore, but a lump sum benefit, corresponding to the balance of the 5-year guaranteed period. Okay. So essentially what the 5-year guaranteed period means is that, for example, you retire at age 60, okay? And then at age 62, let's say you die, okay? So your dependents or your beneficiaries would receive the remainder of they would continue to receive your pension, okay? But of course, it's a different computation. And then they would have this, the balance of the 5-year guaranteed period. So what you're supposed to get until your age 65, so they could get the lump sum benefit equivalent to that period of time, the remainder. So from your 62 to 65 years old, so they would get that. Okay. Monthly pension of a member who retires after reaching age 60 shall be higher of either the monthly pension computed at the earliest time he could have retired, had he been separated from employment or ceased to be self-employed, plus all adjustments thereto. The monthly pension computed at the time when he actually retires. Okay. Okay, so sometimes there would be people who, are contemplating retirement, so they would go to the SSS and I would like to see the computation. I'd like to retire. Can you show me the computation, how much I'm going to receive? Okay, then sometimes they would be like, oh, it's not much, so I'd rather continue working for now, okay, to maybe increase the amount that I'm going to receive when I retire. So they continue working, and then when they reach the age of retirement, or when he actually retires, so let's say even after 60, they continued to work, so they retired at, let's say, age 63. So they're going to recompute the benefits when he actually retires at the age of 63. All right. And then you have your death benefits again, for a member who has paid at least 36 contributions. So his primary benefit shall be entitled to the monthly pension. If he has no primary benefit, his secondary benefit shall be entitled to the lump sum benefit equivalent to 36 times the monthly pension. Okay, 36 times, so that's equivalent to 3 years, right? If he has not paid the required 36 monthly contributions, his primary or secondary benefit shall be entitled to a lump sum benefit equivalent to the monthly pension times the number of monthly contributions paid to the SSS, or 12 times the monthly pensions, whichever is higher. Okay, so let's say the member only, paid less than 36. Okay, so let's say 20 or 10. So they would only be entitled to the equivalent number of how many monthly contributions they have paid. So if it's 20, so they're going to receive 20. And then if they only paid 10, the minimum is 12 or 12 times the monthly pension, whichever is higher. So if it's 10 or less than 12, it would be 12. Okay. Permanent disability benefit. In this tab, I have all the benefits, and then in this tab, I have the computation for the retirement. But since we're discussing that already as we read the law, so maybe I'm not going to discuss that again. All right, permanent disability benefit. So upon permanent total disability, so who has paid at least 36 monthly contributions, ang pension niya would be the following. They would be entitled to the monthly pension. But if he has not paid the required 36, lump sum then equal to the number of monthly contributions paid to the SSS, or 12 months, whichever is higher. So it's like the previous one. A member who has received a lump sum benefit and is reemployed or has resumed self-employment not earlier than 1 year from the date of his disability shall again be subject to compulsory coverage and shall be considered a new member. Okay, so let's say you have permanent disability, you applied for permanent disability benefit, you're receiving the pension and the benefits, but then you decided that I want to work. There's still some sort of work that I can do even if I have this type of disability. So in that case, the benefits that you're receiving will be suspended, and then you will be subject to compulsory coverage again, considered as new member. You have to pay contributions again. Okay. The monthly pension and the dependent's pension shall be suspended upon the re-employment or resumption of self-employment or the recovery of the disabled member from his permanent total disability. Okay, so although you call it permanent total disability, and technically there's still a possibility that they can recover, it's just that the percentage or the probability of recovery is very low, so that's why they consider it permanent total disability. But in case that they do recover and they are able to work again, and they decided to work again, so suspension of benefits, and then they're going to have to be a member again and contribute to the fund. Okay, so that's how it works. As long as you're working, you're a member of the fund, you're a member of the SSS, you contribute to the fund, you pay your contributions. But then if you stop working and then you avail of their benefits, so you will be given the benefit. But if you decide to work again, then the benefit would cease and you have to pay contributions again. Upon the death of the permanent total disability pensioner, his primary beneficiaries shall be entitled to receive the monthly pension. If he has no primary beneficiaries and he dies within 60 months from the start of his monthly pension, his secondary beneficiary shall be entitled to a lump sum benefit equivalent to the total monthly pensions corresponding to the balance of the 5-year guaranteed period, excluding the dependent's pension. Okay. The following disabilities shall be deemed permanent total complete loss of both eyes, of sight of both eyes. Loss of 2 limbs at or above the ankle or the wrist, so you don't have feet, you don't have hands. Permanent complete paralysis of 2 limbs. I think maybe this is for stroke patients, mild stroke patients, because normally they could no longer, could no longer move one side of their body. So it's either going to be the right hand and right foot or the left hand and the left foot. Brain injury resulting to incurable imbecility or insanity. Such cases as determined and approved by the SSS. So in any case, these are considered people who can no longer work because of their disability. So it's considered permanent total. But of course, there are instances that, again, recovery, and then if they are not going to succumb to their disabilities and they want to continue working, so that's good. If the disability is permanent partial and such disability occurs before 36 monthly contributions have been paid prior to the semester of disability, the benefit shall be such percentage of the lump sum benefit described in the preceding paragraph with due regard to the degree of disability as the Commission may determine. If the disability is permanent partial, such disability occurs after 36 months, okay, the benefit shall be the monthly pension for permanent total disability, payable not longer than the period designated in the following schedule. Okay, so for permanent partial, and then what's the other one? Yeah, permanent partial. So there's only a certain number of months wherein you will be able to receive the disability benefits, after which the they consider it as if you are capable of recovering within this period of time and that you can return to work. Okay. Complete and permanent loss or use of. So 1 thumb, 10 months, 1 index finger, 8 months, 1 middle finger, 6 months, 1 ring finger, 5 months, 1 little finger, 3 months. I'm sorry, but I do find it funny that the different types of fingers would have, different corresponding number of months. 1 big toe, 6 months, 1 hand, ouch, 39 months, 1 arm, 50 months, 1 foot, 31 months, 1 leg, 46 months, 1 ear, 10 months, both ears, 20 months. Wait, what? Okay, so you just lost your ear, but you haven't lost your capability to hear. Is that what is this for? Because essentially, if you lost the hearing of both ears, it would be difficult to continue working. Alright, oh, okay, so how do you have the hearing of 1 ear, also 10 months. Essentially, they're saying that you can still work even if you lost the hearing of 1 ear. Hearing of both ears, so 50 months. How many years is this? 4 years and 2 months. Sight of 1 eye, 25 years. Sight of both eyes, I think it's permanent total disability. The percentage degree of disability, which is equivalent to the ratio that the designated number of months of compensability bears to 75%, rounded to the next higher integer, shall not be adjective for distinct, separate, and unrelated permanent partial disabilities, but shall be additive for deteriorating and related permanent partial disabilities, to a maximum of 100%, in which case the member shall be deemed as permanently totally disabled. What do you mean additive? So let's say you lost 1 thumb and 1 index finger. Is that going to be 10 months or is that going to be 18 months? I think that's what they are saying, but I didn't get the answer. Okay. Normally you can ask this, when you're thinking of, what do you call this, availing the benefit. Of course, you have to apply for the benefit, and then you will be assessed, and then at that point you can ask for how much benefits you're going to receive and what's the expectation, how long can I stop working before I have to start working again for myself. Okay. In case of permanent partial disability, the monthly pension benefit shall be given in lump sum if it's payable for less than 12 months. Okay, so if it's less than 12 months, depending on this, so it would be given in lump sum. But if it's more than 12 months, so it's to be given monthly, I guess. For the purpose of adjudicating retirement, death, and permanent total disability pension benefits, contributions shall be deemed paid for the months during which the member received partial disability pension, provided that such contribution shall be based on his last contribution prior to his disability. Should a member who is on partial disability pension retire or die, his disability pension shall cease upon his retirement or death. Okay, so kumbaga walang, the beneficiaries will not be able to receive such any benefit. Funeral benefit, 12,000 pesos to help defray the cost of funeral expenses upon the death of a member, including permanently totally disabled member or retiree. Sickness benefit, member was paid at least three monthly contributions in a 12-month period immediately preceding the semester. So if you are going to avail of the sickness benefit today, so in the last 12 years, you should have at least paid 3 monthly contributions. And is confined therefore for more than 3 days, or elsewhere with the approval of SSS, shall for each day of compensable confinement or a fraction thereof be paid by his employer or the SSS. If such person is unemployed or self-employed, a daily sickness benefit equivalent to 90% of his average daily salary credit, subject to the following conditions. Okay, so it should be more than 3 days in the hospital. In their case, shall the daily sickness benefit be paid longer than 120 days? Wow, that's a lot of days. That's what, 4 months? Nor shall any unused portion of the one 120 days of sickness granted and this will be carried forward. Okay, so for every year, you are allowed to avail the sickness benefit for as much as 120 days is what I'm getting from this. Of course, it's not consecutive. It could be, you got sick and got confined in January and then another month. And then the total for the year maximum is 120. Okay? Or the actual, if it's less than 120. It's technically the actual, but if it's more than 120, it's going to be 120 only. And then it's not, carried forward. So let's say you did not avail of any sickness benefit for this year. So next year, it's still going to be 120 days. It's not going to be 240 days, okay? Just because you did not avail of it this year. The daily sickness benefit shall not be paid for more than 240 days on account of the same confinement. Wait, sorry. The daily sickness shall not be paid for more than 240 days on account of the same confinement. So I think what they're trying to prevent here is double compensation, not for the same confinement. The employee member shall notify his employer of the fact of his sickness or injury within 5 calendar days after the start of his confinement, unless such confinement is in a hospital or the employee became sick or was injured while working or within the premises of the employer, in which case notification to the employer is not necessary because it occurred while working. Okay, so it's assumed that the employer already knows. If the member is unemployed or self-employed, he shall directly notify the SSS of his confinement within 5 calendar days after the start thereof, unless such confinement is in a hospital, in which case the notification is also not necessary. Okay, so the hospital would be... Wait, does that mean the hospital would be the one to notify SSS? Is that what they're saying? That in cases where notification is necessary, the confinement shall be deemed to have started not earlier than the 5th day, immediately preceding the date of notification. The compensable confinement shall begin on the 1st day of the sickness, and the payment of such allowances shall be promptly made by the employer every regular pay day or on the 15th and last day of each month, and similarly in case of direct payment by the SSS for as long as such allowances are due and payable, provided that such allowance shall begin only after all sick leaves of absence with full pay to the credit of the employee member shall have been exhausted. And I think what they're trying to say here is that the employer could advance the benefit that they're going to get from the SSS, but sometimes the employer cannot be sure if the SSS is going to, approve, or how many days they are going to approve for the application. So what they do is that they simply provide the sickness leave available to the employees. Okay, so in which case the employee would still be paid because they are on official leave. Okay, paid leave. And then 100% of the daily benefits provided in the preceding paragraph shall be reimbursed by the SSS to the said employer if the employer advances the same to the employee. Okay. Employer has notified the SSS. If the notification is made beyond 5 days after the receipt of the notification from the employee member, said employer shall be reimbursed only for each day of confinement starting from the 10th calendar day immediately preceding the date of the notification. This is some sort of penalty, because you're given this much number of days to report to your employer, and then the employer to report to the SSS. If anyone failed to do that within the due period, so there's some sort of reduction in the benefit to be received because essentially you did not follow the rule, so something like that. So it's very important for the members to also know the guidelines that they have for each benefit so that they could, comply within the rules. So, within 5 days, notify the employer. Within 5 days, notify the SSS. Should be done. Must be filed within 1 year from the last day of confinement. Wait. Only for confinement within the 1 year period immediately preceding the date the claim for benefit or reimbursement was received by the SSS, except for confinement in a hospital, in which case the claim for the benefit or reimbursement must be filed within 1 year. Okay, so if you're confined in a hospital and notification is done through, the hospital, or I think there is no need actually to, I think, they did not say anything about it here. So I think if you're confined in a hospital, you have 1 year to claim for the benefit. Okay, 1 year. Where the employee member has given the required notification, but the employer fails to notify the SSS, resulting in the reduction of the benefit or denial of the claim, such employer shall have no right to recover the corresponding daily allowance he advanced to the employee, because the mistake rests to the employer because they're the one that failed to notify the SSS. The claim shall be adjudicated by the SSS within a period of 2 months from the receipt thereof. So it will take time. 2 months before it's going to happen within 2 months. So it could be within 1 week, 1 month, but the maximum is 2 months. Should no payment be received by the employer within 1 month, the reimbursement shall thereafter earn a simple interest of 1% per month until paid. So very minimal. The provisions may be filed shall apply to all claims filed with SSS. Okay. Now we have the maternity leave benefit. Okay. 3 months. A female member has paid at least 3 months in the 12-month period preceding the semester of her child birth or miscarriage. 100% for 60 days or 78 days in case of cesarean. I think this has been removed already. There was a separate, separate law about maternity leave. I think it's 105 days for both normal delivery or cesarean delivery, right? The employee shall have notified her employer of her pregnancy and probable date of her childbirth. Notice shall be transmitted to SSS. They will file for the maternity leave benefit. Full payment shall be advanced by the employer within 30 days from the filing of maternity leave application. Payment of daily maternity benefit shall be a bar to the recovery of sickness benefits provided by this act for the same period for which daily maternity benefits have been received. Oh, okay. So if you're already receiving the maternity benefits, during that period, you are not allowed to file for sickness benefit, okay, because you're already receiving the maternity benefit. Shall be paid only for the first 4 deliveries or miscarriages. Okay, so if you're on your 5th child, you cannot what do you call this? You cannot avail the maternity benefit, okay, for your 5th child. It's only for the first 4 deliveries or miscarriages. SSS shall immediately reimburse the employer for the maternity benefits advanced to the employee upon receipt of satisfactory proof of such payment and legality thereof. If the employee member should give birth or suffer miscarriage without the required contributions having been remitted for her by her employer, or without the latter having been previously notified by the employer of the time of the pregnancy, the employer shall pay to the SSS damages equivalent to the benefits which said employee member would otherwise have been entitled to. So let's say hindi na-remit ng employer yung contributions, and so the employee member would still, receive the benefits that they are entitled. They're in a way mandated to still provide for the benefits that they otherwise would have been entitled to had the contributions been remitted. Alright, now we have the unemployment insurance. This is the newest one, or involuntary separation benefit. A member who is not over 60 years of age at least paid 36 months of contributions, 12 months of which should be in the 18-month period immediately preceding the involuntary and unemployment of separation. So 3 years, shall be paid benefits in the form of monthly cash payments equivalent to 50% of the average monthly salary credit for a maximum of 2 months only. In a way, it's some sort of transitionary financial assistance. You've been separated from your work, and right now you're still looking for a new work, so you're given the unemployment insurance 2 months. For 2 months, but the amount is only 50% of your average monthly salary credit. Okay. So it's for an employee who is involuntary unemployed, can only claim unemployment benefits once every 3 years. Okay. Involuntary. Okay. So if you resigned, that's not involuntary unemployment. Okay. You resign, so that's voluntary. You would not be able to get the unemployment insurance. So this is for, like the employer ceased operations, or they closed the business, or there's retrenchment, or they're suffering from financial difficulties, so they laid off some of their employees. So that's what it means for involuntary unemployment. In case of concurrence of 2 or more compensable contingencies, only the highest benefit shall be paid, subject to the rules and regulations that the Commission may prescribe. Okay. What do you mean? So let's say this is just an example. So a pregnant woman applied for maternity benefit, and then during that period, the business also closed down. So he's enjoying the maternity benefit. I think during the same period, they would not be able to apply for the unemployment insurance because he's already having one. Okay. The highest benefit shall be paid. Okay, and then if he got sick during that time as well, so he is also not going to be entitled to the sickness benefit. Only one. Non-transferability of benefits. 6 months beneficiary. Okay. If the recipient is a minor incapable of administering his own affairs, the Commission shall appoint a representative. Okay. I think this is for the beneficiary, I guess. Exemption from tax, legal, process, and lien. Okay. SSS is non-taxable. Fees of agents, attorneys, etc. No agent, attorney, or other person in charge of the preparation, filing, or pursuing any claim for benefit shall demand or charge for his services any fee, and any stipulation to the contrary shall be null and void. Violation, so there's a fine, penalty, imprisonment. Employees' contributions, beginning on the last day of the calendar month when an employee's compulsory coverage takes effect, and every month thereafter during his employment, shall deduct and withhold from such employee monthly salary, wage, compensation, earnings, the employee's contribution in an amount corresponding to his wage, salary, in accordance with the contribution table. The monthly salary credit schedule and rate of contribution shall also apply to self-employed, voluntary, and other members. And then you have your employer's contribution. This one, employee's contribution deducted from their salary. And then the employer's contribution is, of course, taken from the fund of the employer. Okay, so it's an expense on the account of the employer for the benefit of the employee, okay, the member employee. Contributions of self-employed members. So the whole amount will be shouldered by the self-employed member since there's no employer counterpart. All right. Government contribution. Government guarantee. The benefits prescribed in this act shall not be diminished, and to guarantee said benefits, the government of the Republic of the Philippines accepts general responsibility for the solvency of the SSS. So this is what I'm saying, that although there could be mismanagement of SSS, the fund may not be able to last for a long time. They're saying that the fund could only last for a certain of years, and although there are questions on its solvency or the number of years that it could continue, there is this guarantee. Okay, so even if that happens, those who are receiving benefits would continue to receive benefits because it's guaranteed by the government of the Republic of the Philippines, and those people who are members who contributed money to the fund, by the time, sometimes there are questions on I'm 28 years, there's still 32 years before I would retire. They're saying that the fund could only last 26 years or 23 years. So even so, the government would, it's a guarantor. So even if the SSS becomes insolvent or there would be problems, the government would, provide the benefit. One way or another, they're going to find a way to be able to continue giving the benefits to the members. Remittance of contributions, so there are due dates, deadlines that the employers are adhering to, and then if there are late payments, so there's a penalty, 2% per month. Okay. Right to institute the necessary action against employer, 20 years from the time of delinquency. And then we have this. Remittance of contributions of self-employed, method of collection or payment could be over the counter through the bank or through electronic means nowadays. Employment records and reports. Okay. So during the remittance of the contribution, so of course the employer also provides information on the members or on their employees. Okay, so other information, mostly administrative and for the information of the employers. Report and registration of the self-employed. Okay, so if you're self-employed, you'd like to they call this register for SSS registration, they can do so. There's a form to be filled up and then you have to submit and then you have to pay for the contribution, of course. Deposits and disbursement, investment of reserve funds. This is for the management of the SSS. Okay, what you're going to do with the contributions, you're going to invest it in different types of investments. They could also lend it to the members through their salary loans or business loans, educational loans. Okay, and then for them to earn, for additional income to build up the fund. Essentially, they're an investment firm or investment organization as well. So they do that. Not sure if you can hear the chicken, but I'm going to assume that you do. Sorry about that. Okay, and then we have this. Okay, so there's a prescribed ceiling on the type of industry. So again, diversification of the investment. So 60% in private securities, 5% in housing, 30% in real estate, 25% in short-term and medium-term member loans, 30% in government financial institutions, 15% any particular industry, 7.5% FCDU or foreign currency denominated investments, 5% in private sponsored infrastructure projects without guarantee, 5% private and government sponsored infrastructure projects with guarantee, 5% in private and government sponsored infrastructure projects. So again, this is the ceiling or the maximum amount. Okay, this is not the actual that they say they put 60%. Okay. That's not. Okay, this is just the maximum should they choose to. Fund managers, okay, people who would assess on where the investment should be put so that it could earn more for the fund. Mortgage or insurance account. Then we have records and reports, penal clause. Government aid, IRR, transitory clause, separability clause, and then we have the effectivity. Okay, so this tab, again, the benefits, but we've also covered that during the discussion, overview of the law. And then we have here the retirement benefits, computation, but again, we've also covered that, so that's it. And then lastly, we have the new table, supposedly effective this January 2021. Oh, okay. It's very tiny. I'm so sorry. So basically, we have here the range of compensation, and then we have here the monthly salary credit. This is going to be the basis for the computation of the benefit, And then you have the provident fund for those who are earning more than 20,000. So they can contribute. Sorry, this is mandated now. So this is additional benefit for them, I guess. And then there's a corresponding, employee share, how much would be shouldered by the employee, this line here. And then how much would be shouldered by the employer. And then of course we also have the EC, employee's contribution. Where is that? This one, ER. But this one is shouldered by the employer actually. Then we have the total amounts and then total. So that's it. But I think this is not effective January 2021 because it has been deferred, approved by the President of the Philippines in consideration of the pandemic. Okay, so we'll see when they're actually going to implement this, because this table is effective for, essentially this is for 2021 and 2022 before they do another contribution hike sometime in 2023. Alright, so that's it for this video. In the next one, we're going to discuss the SSS financial statements. Thank you and bye.